I guess the big question I'd have is why would I want to buy any cyclical tech, highly cyclical tech, in the here and now?
I don't know that you do. I mean, you're right. I mean, like semis have had a good week, I guess, but they're still down 10% over the last month. They're down 30% for the year, much worse than the overall market. They're still down 20% year over year. Investors are very worried about the broader economy of inflation, COVID, war. They're worried that all of the strength we've had in the numbers and the fundamentals of the last year is not sustainable. They're worried about overshipment and double ordering and that sort of thing, and inventories building. And now we actually are starting to see some signs of cracks. There are some very significant weak points in the industry, particularly around some of the consumer-focused areas, PCs, smartphones, graphics cards, TVs, that sort of thing. They're kind of grasping onto some of the investors are grasping onto some of the other areas that are still holding up, auto and industrial. But I mean, they're obviously worried that those will be the next shoes to drop as well. So look, I think there's a lot of worry out there right now on the last week's performance, like for the space notwithstanding.
Yeah, I mean, no, it sounds like literally you don't believe the hype at all. You don't believe this bounce. Are you suggesting that it's soon to evaporate?
Well, I don't know, but we've been cautious for a while. I mean, I started downgrading stocks in September on some of these worries over shipment and double ordering, even before some of the macro stuff. In hindsight, we probably should have downgraded a few more, as it turns out. But I've been worried about sustainability of demand, increasing evidence, at least to me, that some of the strength we're seeing is not necessarily going into end products, but rather is going into inventories potentially on the shelf. There's a phenomenon that happens during supply shortages when customers can't get what they want, they order more, right? We've talked about this before. It's the toilet paper situation, from a couple of years ago. And now you fold onto that like real worries about the macro and COVID that is still around and inflation and everything else. It causes concern. So I'm nervous. I've been nervous, yes.
Okay. I mean, let's talk Intel before I let you go. $31.50. That's where the stock is now. You have an underperform on it with a $30 target. They finally break ground today on these Ohio plants. I want you to listen to what Gelsinger, the CEO, Pat Gelsinger, told our own Christina Partsinevelos today. We can chat on the other side of that.
Sure.
This should be the beginning of supply chain rebalancing. It's not just about the fabs, but so many other components of the supply chain.
So that's what Gelsinger says. And then Christina tweeted just a few moments ago that the CEO also told her that the two fabs could take 3+ years. That essentially pushes back the 2025 deadline. As negative as you are on Intel, how, if I'm in the stock today as an investor, do I need to be thinking about this over the next 3 to 5 years?
Yeah, so I mean, I think he even talked about this a little later in that interview, but he's right. You're spending a lot of money for quite a few years with no revenue, right? Because it takes time to bring this stuff online. I think it's still open for debate whether or not they're actually going to need all of the capacity they're bringing online. And as you may know, or your viewers may know, Intel had a horrendous earnings a couple of months ago. They took a massive haircut to their numbers. As it turns out, it may not have been enough. Gelsinger was actually at a couple of recent conferences this week, and the transcripts are available, where they're basically suggesting already that even this quarter, as bad as it was, they're probably tracking to the low end of guidance. So I think it's questionable for their own business how much capacity they're going to need. Now, clearly, a lot of what they're building for is maybe not even for their own current business. It's for this foundry business that they're trying to build. They want to build out a business where they'll be making parts for other players. That is still open for debate, though. Like, how competitive are they going to be, especially when they're having trouble delivering on their own roadmaps, let alone anybody else? How are they going to compete against a TSMC? Is it going to have to come down to a pricing game? Can they actually get the business that is required to fill the capacity that they are going to spend 3 or 4 years actually sinking into the ground in many billions of dollars? These are all unknowns. I always say, like, Intel, if you're owning it, like, it's a 5-year story, and we are just at the beginning of that transition, and it is likely to get worse, potentially far worse, before it gets better. So these are all the things that are going to have to be on your mind if you're an investor in the stock.